Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
So the headlines coming fast and furious from everywhere when it comes to political risk. Joining us now is Nathan Dean. He's Bloomberg Intelligence Senior Policy Analyst. Nathan, what is the rhetoric that we're going to see out of the White House this afternoon based on now Canada putting tariffs on U.S. steel and aluminum and the EU threatening retaliation as well?
I think it's going to be very similar to the Truth Social post that we saw from yesterday from President Trump in responding to the Ontario Premier Doug Ford in terms of those tariffs, or at least the export taxes that he was putting on electricity to those 1.5 million Americans up in Minnesota and New York. And I think this is what you're going to wait, and you're going to see this exactly the same thing coming from EU, because look, we've always been telling our clients when it comes to tariffs, President Trump goes out there with these big statements and then subsequently walks them back, negotiates, and it doesn't really see the fruition. However, over the last few days, we begin to see the small incremental tariffs take place. The 20% tariff on China, the metals, the aluminum and steel tariffs on Canada just yesterday. So these tariffs are now coming into fruition. And so I think the rhetoric is going to continue. But we always have to just go back to the idea that there's one person that decides whether these tariffs happen or not. It's President Trump. So you always have to just keep your mind open that he could potentially walk some of this back.
I've asked this before. I'll ask it again, and now it's on this issue of tariffs. Where are the Democrats? Who's the voice?
Yeah, so they're still trying to figure out their voice. I mean, obviously, there's been a lot of push in terms of from House Democrats trying to tell their Senate colleagues that they should vote no on this government funding bill that's making its way through Congress in response to DOGE, in response to tariffs, just in response to President Trump's agenda. The Senate Democrats are actually meeting today. They have to figure it out. There's going to need to be 8 votes for the Democrats on Friday because Senator Rand Paul is going to vote no. Otherwise, we're going to risk a government shutdown. And I just do not think the Senate Democrats have a strategy yet in place that warrants, what their response to President Trump will be. And as a result, a lot of the news cycle continues to be dominated by President Trump and his actions.
I have to say, the fact that we could have a government shutdown has not at all been on my radar.
Nope.
That seems like the last thing we got to worry about here when it comes to being a market participant. So, no, where are we, though? Will it shut down, or are we good?
Well, your view is absolutely correct from the mindset of those who pay attention to the markets, because when it comes to government shutdowns, there's very little impact to markets. I mean, the 35-day shutdown that occurred under President Trump's first administration, markets went down and then subsequently came back up. But where we are at the moment is yesterday the House Republicans passed a bill. It's not a clean bill, but a clean-ish bill, mostly clean, but has a lot of things in there Democrats don't like. But what Speaker Johnson did is he said, look, we've passed a bill. He sent the House home. Everybody left town. So now it's up to the Senate Democrats to decide, are we going to support this bill, or are we going to risk shutting the government down? And because the House is gone, a shutdown will most likely occur. I think the Senate Democrats will ultimately take the deal. I may be out of consensus out of that, but I just do not think that the Senate Democrats right now are aligned on their strategy. And just as a few minutes ago, Representative Alexandria Ocasio-Cortez was tweeting out that people should be calling the Senate Dems because it looks like, in her words, they're going to start to cave. So, I don't think the government's going to shut down. But again, for those people who pay attention to the markets, there's really no impact here. I mean, a short-term shutdown really even doesn't impact the equities like large defense contractors.
What's the sense of timing, Nathan? When will we get a decision on a potential shutdown or what the Senate's going to do?
I think tonight you'll start to see the comments from the Democratic senators giving an indication of their position. Senator John Fetterman has already come out and said he's going to vote for the bill. But a lot of the other moderate Democrats who potentially could vote for this are keeping their powder dry. They're essentially saying, look, it's a choice of 2 bad choices: President Trump's agenda, or we risk shutting the government down. But I don't think the Democrats are going to try and surprise this by Friday. I think we'll know either by late tonight or early tomorrow where they're going, because, look, at the end of the day, it's not an easy choice for them. And the last thing they want, I think, in my opinion, is to surprise everybody and just say, we haven't been saying anything for days, and then, waits, we're not going to vote for this. But, anything can happen. We're in, these are times that a lot of people don't know what's going to happen.
Okay, let me say something crazy. What I found really interesting was that we had Ontario putting tariffs on hydropower, right? And then all of a sudden, moments later, like a day later, it was taken off. And then now the negotiation has started to happen between Ontario and the U.S. What do we make of that? Like, do we make of the fact that like any retaliatory tariffs won't have any teeth because it's all a negotiating ploy, and that Trump is going to get them to the table no matter what?
Well, you know, I'll say, look, that's the primary objective, is to get them to the table and to negotiate. But also, if you look at the Canadian steel and aluminum tariffs, you know, President Trump's Truth Social statement said, look, we're going to 50%. Subsequently, we're now at 25%. So that tariff did actually take place. But, you know, this process, I think, continues exactly how it's been for the last few months. President Trump puts out a statement, says we're going to do this. Markets react to it. There's a negotiation. Sometimes just hours later, it's walked back, and there's additional open doors and additional nuggets that says maybe this isn't going to happen. But incrementally, tariffs are being put on place. That 20% tariff on China, for example. So, you know, if investors have not already looked at the supply chain aspects of the companies that they're looking at, they need to do so now, because we can't say with 100% certainty that these tariffs aren't going to happen. So investors need to be prepared for that supply chain disruption or the tariff hit as a result of it.
All right, Nathan, let's be a glass half full type of view here and say the government will not shut down. What are the next couple of things on Congress's to-do list, do you think?
Well, you know, Speaker Johnson is really trying to push forward with this House reconciliation package to extend President Trump's tax cuts. This was going to cost around $4.5 trillion to extend those. Now, they have to do it by the end of the year. If a government does shut down, nobody's allowed to work on that. And so the Republicans not be able to work on that until the government reopens. Now, assuming the government reopens, Speaker Johnson even just said this morning that he hopes for all of this to be resolved by May. I'm not exactly sure that they're going to be able to get there, because even though the Republicans were unified yesterday in terms of keeping the government open in terms of a budget, it was only a 6-month continuing resolution, and it was a clean-ish bill. That's much different than asking New York State Republicans, are you going to support not giving much in terms of SALT relief? Or asking other folks, are you going to support taxes on tips, which potentially could drive the deficit even higher? So the Republicans have to figure out, because there's no Democrats involved in this, the Republicans are going to have some very strong and powerful conversations, and I'm not exactly sure that's going to take place in May. I think that's going to bleed throughout the summer. So, but that work will continue next week, assuming the government stays open.
Again, I was just at an energy conference in Houston for a couple days, and the theme is that CEOs are really confused. People are not pulling projects, but they're definitely pressing the pause button on many, many things. Is the administration listening to CEOs?
I think so. I mean, obviously, President Trump met with the Business Roundtable yesterday. This is a collection of large CEOs from, Fortune 500 companies. And, you know, we heard through reporting that that was the message that President Trump gave. But I would also say that President Trump is very, very much a believer in his strategy at the moment. And I don't think there's much that the business community is going to be able to say to change his mind. I think that it has to come from sticker shock from prices, because prices are what drove a lot of voters to President Trump in the November elections, and prices is something that a lot of American consumers, especially Americans that don't have access to the markets or don't have assets in the markets, want to see from President Trump. And so I think that price discussion, as we'll see over the next few months, is what ultimately may change President Trump's mind. But then again, he also likes seeing the stock market in the green. So, you know, again, it's very hard to predict.
Did we get any meaningful news out of that meeting yesterday with the business leaders, Nathan?
No, not that I would say to any of my clients. I think it was just more of the same, that, you know, business leaders were saying, look, we're looking for deregulation. Deregulation is not a magic wand. It's going to take time. I think there was a lot of sentiment around the election around deregulation. They're looking for clarity on tariffs. I don't think you're going to get that. I think the strategy of strong statements subsequently with negotiations. And then they're looking for clarity on this tax debate. And, you know, the problem with that is that it's just going to take a long time, because, you know, they have to figure out how to pay for $4.5 trillion in tax cuts, or they have to figure out a way to keep it as less impactful on the deficit as possible. And so I don't think there was a lot of clarity coming from the White House to the business leadership. I think it was business leadership talking points going to the White House.
How much do you think all this is currently reflected in the equity prices, or in equity prices?
I think it's beginning to be a little bit more and more. I mean, because I think the realization is that, like, look, this isn't exactly turning out the way that I think a lot of investors thought after the election in terms of sentiment. You know, the tariff discussion, I think a lot of people presumed that President Trump was going to back down on it. And look, he may, But President Trump is certainly asking some very difficult questions of the market when it says, look, starting tonight at midnight, I'm putting on a 50% tariff, and then 2 hours later saying, no, maybe not. We're going to negotiate instead. Markets don't like that. So I think what we're seeing right now is just this uncertainty. And per your point about, pausing a lot of projects, I think a lot of investors are just saying, look, we need clarity on what's going to happen here. Otherwise, we're going to begin to really try and protect our positions. They're not there yet. But if this uncertainty and this volatility continues from the political landscape, I wouldn't be surprised if investors react in a different way in the next few weeks.
Nathan, thanks so much. We appreciate that. Nathan Dean, our man of reason down there in Washington, D.C., helps us understand some of these policy moves coming out of Washington, D.C. Nathan Dean, senior policy analyst for Bloomberg Intelligence, joining us from Washington, D.C.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We broadcast to you live from our Interactive Broker Studio right here in Midtown Manhattan. You can also check us out on YouTube.com as well. All right, yesterday, the U.S. and Ukraine have reached a 30-day ceasefire with Russia. Now it hinges on Russia's acceptance. While speaking to reporters at the White House, President Trump addressed that deal, saying it's now up to Russia to agree.
Ukraine has agreed to it, and hopefully Russia will agree to it. We're going to meet with them later on today and tomorrow, and hopefully we'll be able to wipe out a deal. But I think the ceasefire is very important. If we can get Russia to do it, that'll be great.
All right, joining us now is Oliver Crook, Bloomberg Europe correspondent on these talks. He joins us from Berlin. All right, Oliver, what do we know? What is the state of play?
Yeah, so listen, it's a ceasefire agreement, we should just say, cannot be agreed to by only sort of one set of parties. But we should say that the Ukrainians now finally got on board, and that is not what they wanted to do even 2 weeks ago, right? We were hearing from Zelenskyy and a number of top Ukrainian officials before that massive blow up in the Oval Office, saying that basically they do not want to come to a conversation about a ceasefire. They want to come to a conversation about lasting, just peace. That obviously changed after the United States paused its military equipment deliveries to Ukraine, stopped giving them intelligence, all that sort of thing that kicked off last week. And now they've come to the table, and it sounds like they have agreed with the United States after those talks in Saudi Arabia with Secretary of State Marco Rubio to that 30-day ceasefire. The U.S. sees this as basically trying to create the conditions under which you can negotiate that permanent peace agreement. This 30-day ceasefire would also include an exchange of prisoners of war, release of civilian detainees, the return of the forcibly transferred Ukrainian children, and really to put together these negotiating teams, which haven't obviously had any contact between Russia and Ukraine since the beginning of the war, and that has led to the immediate resumption now of of American military kit to Ukraine as well as intelligence, and has been just basically the United States and Ukraine. And now, as you were just saying, basically everything is in Putin's court right now as to whether or not he's going to even entertain these discussions.
And to that end, Oliver, Bloomberg News has some reporting out that Putin eyes way to truce terms, but with his own conditions. I'm not really sure what that means. So maybe the broad question is, A, do we think Putin's going to engage in this process right here and now with this agreement? And what do we think he wants?
I suspect not just right here and now. I mean, I think that forever since the beginning of this war for the last 3 years, time has been on the side of the Russians. So they have really in no rush, particularly since they've sort of gained momentum on the battlefield. Again, that could mean a great many things. We've heard a number of things from the Russians. They have said a number of things that are basically non-starters. They want to take basically all of the eastern regions of Ukraine. So that's Luhansk, Donetsk, Zaporizhia, and Kherson. These are not even territories that they fully occupy right now. So this would mean even further concessions. They would want legal recognition of that. They would want Ukraine to basically abandon its aims to join NATO. They would say that also European troops as sort of deterrent or peacekeeping forces with Ukraine are non-starters. So these are all things that the Russians have said in the past, that they basically are non-starters to any sort of agreement. That begs the question of what really is in the interest of the Ukrainians, or is this just going to be basically a pretense for the Americans to abandon Ukraine if they say, they basically cannot surmount the terms. What I think is interesting, and this was probably the most interesting thing we got out of the press conference from Marco Rubio yesterday, saying that basically they hope that the Russians will sign the deal, but if they do not, they'll know who the impediment to peace will be. That then provokes this question, and we don't really know the answer to this from the Trump administration. If the Russians refuse to come to the table and the United States is dissatisfied about it, What is Trump prepared to do about it? We've had some talk about potential financial market regulations and potentially sanctions on banks and finance, as well as fossil fuels. We haven't really fleshed out that side of things. We know the sort of the difficult circumstances they're willing to impose on Ukraine, but less so what they're willing to impose upon Russia.
Does Europe have a seat at this particular table?
Emphatically not. So I think the best that the Europeans can basically hope for is to get kind of an update at the G7 foreign ministers meeting that's happening right now in Canada. But basically, no, they do not have a seat at the table as it stands. I mean, I think that the U.S.'s plan and what they would like to see longer term is the Europeans to take more security responsibility, obviously in the continent, possibly in Ukraine. But again, this is a very thorny discussion, even for the most hawkish voices within Europe. You hear it from the Polish. They are very reticent to ever commit any kind of troops, even as peacekeeping forces within Ukraine. So that is sort of a very difficult conversation to have, even nationally. So I think that their sort of role in this has been sort of ever diminishing, and I suspect is not going to increase anytime soon.
Oliver, what are the prospects for and maybe timing of a potential meeting between Mr. Trump and Mr. Putin?
Yeah, so listen, I think that Trump would like to see this happen sooner rather than later. I think, again, Putin is proceeding with sort of extreme caution. They've got all the sort of groundwork sort of laid for it. They would like, we know, to have that meeting, or Trump would like to have that meeting in Saudi Arabia. At this point, though, I think it's way too early to tell when that could happen. We do know from our reporting that Steve Witkoff, who's actually technically the sort of special envoy for the Middle East, but seems to be the kind of special envoy for ceasefires, generally speaking, he's going to be in Moscow later this week to sort of get the ball rolling there. But again, I think it's a little bit too early to say to give a timeline on that at this precise moment.
Where are we in ramping up defense spending in Germany?
So listen, I think this is going to be this was the kind of the bazooka that was dropped the other week by the leader of the CDU, who's going to be the incoming chancellor, Friedrich Merz here. They were talking about basically reforming the debt brake, and that is a huge deal here in Germany. The debt brake is something that's not just a law within Germany. This is part of the German constitution. They put it in 2009 after the financial crisis. What's interesting is Merz ran on a platform basically saying that they will not reform the debt brake, and then 5 days after basically winning the election, and not winning sort of a decisive majority, winning just sort of the biggest proportion within parliament, said that they're willing to sort of reform the debt brake. That comes with its own issues within Germany at the sort of national level. I mean, you have the AfD, the far right, that has been basically accusing a lot of the sort of German politicians to be acting undemocratically. What they are now trying to do is force through this debt brake reform, which requires 2/3 of the parliament with the old parliament, despite the fact that they had an election, in order to get this money through. And listen, the market was very, very pleased about this in many respects, and this was priced in basically all the way to the market. And then there was some doubt about whether or not they're going to get it through. It seems they're going to be able to get the compromise in the lower house in the Bundestag, but it is not necessarily a done deal that they're going to be able to reform the debt brake to get all that defense spending done.
So when do we get clarity out of Germany there on this story, Oliver? Because that obviously is a big move.
Yeah, we should get it over the next couple of weeks. Right now, where it's basically stuck is at the Bundestag, where the Greens, they need to get the Greens on board in order to reform this at the first sort of step. The Greens have kicked up a bit of a fuss because they've lost basically a large proportion of their representation in the next parliament, and they want to put their stamp on things. I suspect they'll be able to get through that. But then there is the sort of the Bundesrat, which is the upper house. I don't want to get too into the weeds here of German politics, but then you need to get a lot more complex arithmetic. So we will get clarity of this over the next couple of weeks. But if they can't get this through, this would be an absolutely massive blow. Of all the sort of talks we've had about defense spending and stuff that they're doing at the EU level, this was by far the most significant thing we've seen out of European defense. And we've seen it priced into a lot of the stocks and a lot of the companies. Rheinmetall put out their earnings today. This is the biggest sort of defense contractor here within Europe. They're expecting 25 to 30% growth in sales just this year. That could boost even higher if they get this through.
Yeah, I mean, we're talking almost 1 trillion euros. Like, that ain't chunk change at the end of the day. Oliver, thanks a lot. Really appreciate it. Oliver Crook joining us. He is Bloomberg Europe correspondent.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Well, in case you didn't know, I was in Houston, Texas over the last day and a half, speaking to many energy CEOs and officials and Secretary of Energy, Secretary of the Interior. It was really great. We got a lot of stuff going on there. I did sit down with a conversation with ONEOK President Pierce Norton. So ONEOK is a major U.S. midstream energy company, which means they transport stuff like natural gas, NGLs, that's liquefied stuff, and crude oil all across the U.S. energy corridor. So I asked him, like, can you actually build? Can you build, baby, build, if we're going to have tariffs on aluminum and steel?
What I would give some stats behind that is in 2007, when the shale revolution started, there was about 20 TCF a year of gas flowing in the United States. Last year it was 40
cubic feet a day.
Trillion cubic feet a day. Now it's 42 trillion cubic feet a day. So we've doubled that just since 2007. That took a massive build out. We've proven we can do it before, and I think we can do it again.
What do you need to see, though, from the administration? Because it's permitting, it's now tariffs, it's now, putting a pipe in the ground, it's avoiding any lawsuits, interstate.
Right.
Like, what do you need to see to get it done sooner rather than later?
Well, I think it's anything that actually accelerates, the permitting is a help to us. But we have a slogan at ONEOK that, we don't pick sides, we pick issues. And if the issue is getting energy as quick as we can, then we need to focus all aspects of that, not just on the administration, but what is it that we can do as an intrastate company, an interstate company, and what is it we can do as an industry.
Aside from permitting, if we get aluminum and steel tariffs of 25%, what kind of headwind is that for build out?
Well, it's a timing issue. For us, we've already built out most of our assets. We spent $10 billion since 2017 in building out growth projects, and then we spent another $25 billion in mergers and acquisitions. So we've kind of gotten past that. So on the pipe, it's a timing issue. It's where are you in the process of either trying to negotiate a deal or are you already putting it in the ground? In our case, you're already putting it in the ground, so it's not going to have a material impact on us.
To that point, your CapEx spend has ramped a lot as you're doing all those projects.
Right.
When is your peak CapEx?
Probably not until the next couple of years.
And what does that wind up looking like? Because that's a big spend. How do you reassure investors that it's really going to end there and what that looks like?
Right. It's probably around $2 to $3 billion a year. But given our size, we're now a $60 billion market cap company. We added from 40,000 miles of pipe to 60,000 miles of pipe. We cover 23 different states. We go all the way from the wellhead to water, and also all the way to basically the trucks that bring the refined products, the jet fuel, the diesel, the gasoline, to the end user.
When do you think you would be more free cash flow focused versus investment focused? What does that turn look like?
We're already free cash flow focused.
Okay. You could be both, like all that investment cycle?
You can be both.
Okay.
Yeah, and the reason is because if you have enough free cash flow, it opens up all levers, for capital allocation. Our first priority is to actually spend money on these high return projects. Second one is to look at dividend increases. The third one is reducing our debts. You do all that, and you do all of that kind of stuff, and we've announced a $2 billion buyback program on our stock. We still have money left over from that. But our commercial people find a way to find those good projects for us. So I'm not worried about spending that in the right way.
If oil prices slide, they were at 6-month low yesterday. If natural gas prices slide, does that hurt you? How does that affect that cash flow?
What we've seen is that the producers are way more resilient than they used to be. Used to, when prices would go up or down a small amount, they would either throw rigs, at the issue, or they would lay rigs down. Now that gap seems to be a whole lot wider. And part of that is because they're much more efficient than they used to be. They can drill longer laterals, especially where we are really concentrated up in the Permian Basin and the Bakken Basin. They're drilling, they used to drill a 2-mile horizontal lateral, now it's almost 3. So they can do it for less capital.
I love that you brought up the Permian, because we heard from Mike Wirth yesterday of Chevron that the Permian eventually is going to plateau in the next few years. Do you see that on a takeaway capacity basis?
Well, I've been in this business for 43 years, and one of the things that I've seen is every time you predict something like that, Usually they find a way of even becoming more efficient, so therefore opening up more drilling, so you got your probable reserves, you got your possible reserves, and then, but your proven reserves are what they're really after. So I would question, I can see, what is it that is he talking about proven or probable reserves? Because they have different pricing points.
Mm-hmm. When you take a look at the kind of infrastructure build out that we're seeing, and I know that you're already putting pipes in the ground, what do you think we need to move stuff in the next 5 to 10 years? Like, what stuff are we going to be moving around?
We're going to move all kinds of molecules. What people typically talk about is natural gas, which in our business we call methane. But we're also going to move molecules for ethane, for the petrochems. We're going to move molecules for propane, in which we just announced a dock down in Texas City with our partner Marathon to provide propane all over the world scale dock. We're going to be moving isobutane, normal butane, gasolines, and in our case, we move jet fuel, we move gasoline for cars, and we also move diesel fuel. So all of those molecules, there will be more of those to move in the future.
In your line of sight with those molecules, any signs of a recession in the U.S., slowing economy, slowing demand?
So far, not.
Not.
Yeah.
Definitive not. From Pierce Norton, ONEOK president and CEO. Of course, it's a major U.S. midstream energy company, so they transport all the stuff. Now, the big issue here, not to nerd out on you here, is that in order to make all of this happen, and I mean all of this, like power demand, data centers, you name it, you need pipelines and stuff. You need transmission lines, which means you need permitting reform. And I know that people's eyes glaze over when you hear that, but it's a mess.
Now, is this administration, does the industry have expectations that this administration will be better?
Yes, but will it stay better? Will it be permanent? Permitting reform, or will it be small tweaks? Because to get permitting reform and get all of the potential lawsuits from states taken care of, all your pricing, all your sourcing, and pipe in the ground in 4 years could be very much impossible. So you need permanent reform in order to make it happen. That part, I think, is a little bit TBD.
What has changed, though, is the reasons we need this energy. And I think that being AI, which most people don't know what AI is, and I might throw myself into that camp, but I know it's a thing, and I know it's generally net positive, and it's a strategic imperative for the United States. Therefore, in order for me to be a leader in AI, I have to be a leader in or a supporter of energy.
Yes. And I spoke to some of the big power players. So Constellation Energy, NRG, NextEra, these are all the guys. Like, their stock moves like AI stocks because they're the power providers, right? They were saying, though, that their demand growth that they've seen has nothing to do with AI.
Oh.
It's still cloud. Okay. It's still population growth. It's still just general demand. The AI is then layered on top of that. So these kind of forecasts, like the current money that they're making, has nothing to do yet with those data centers.
Interesting.
Which I found to be extremely interesting, that we're way in the first inning when it comes to beefing up that kind of demand.
What is the energy folks down here in Houston, what were they feeling about just the tariff discussion?
Oh my God, they love it.
They love it.
No, I'm kidding.
Yes.
Okay, so on the record, everyone was always talking about how that they're minimally exposed, it's de minimis, it's just, maybe 5% of their cost, it's no big deal. Off the record, no one loves it.
Yep.
And they also don't love the uncertainty. And as I was mentioning before, like, I asked particularly Patrick Pouyanné, who's the CEO of Total Energies, who is offshore wind projects, right? I said, are you throwing them in the trash? He's like, no, we're pausing. And I was like, why pausing? He's like, they're 30-year leases.
Yep.
This is a 4-year administration.
Right.
But pause is still a pause.
Yep.
And pause is still like not putting capital into certain projects.
And when I think of energy projects, these things take time.
Long time.
And a lot of capital. So you have to have some level of certainty before you start putting all that money into the ground.
Absolutely. And the buyers have to too.
Yep. All right. Good stuff. I mean, we got plenty more to go too. But I mean, it just goes to the issue of, the energy is just one of those industries that doesn't like uncertainty.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
I was in Houston, Texas over the last day and a half for a week-long conference called Sarah Week. It's where all the energy CEOs, officials, energy ministers, you name it, are all there to discuss policy as well as make deals, etc. I was privileged to talk to the CEO of GE Vernova, Scott Stracek. Now, GE Vernova was spun off a year ago from GE. It's the gas and wind turbine manufacturer. So power generation, power grid, this is the company that makes all that stuff. The transformers that you plug into the grid to make all the power work, they make that stuff, them and 3 other companies. I sat down with him and I said, look, we have tariffs coming on. There's recession fears everywhere. Equities are getting hurt. How does this affect your business? Here's that part of the conversation.
We've certainly experienced stock volatility over the last 6 months, but the end market's not so much at all. No, I mean, just like we started the year, I'd say we expect substantial growth in both our gas and our grid backlog. It's substantially higher margin than when we started the year. Continuing to work on operationally improving our wind business. So that's the one end market that's a little bit softer for us. But certainly in our larger, faster growing businesses, really no change through the first 2.5 months of the year.
If we get tariffs on aluminum and steel tomorrow at 25%, how does that impact you?
At the end of the day, these are technologies that are needed. And this is also an example of where it helps to be a U.S.-based company. I mean, we only buy about 5% of our raw materials from Canada, Mexico, China that gets imported into the U.S. So we'll have to navigate through whatever policies come, but we feel like we can manage through those disruptions.
Do you have pricing power to push it through?
In the end, it doesn't mean in between now and then, there couldn't be some financial implications for us. But with only about 5% of our material buy being in those countries, we'll navigate through it. But we're not immune to tariff risks, but we're confident we can navigate our way through this.
So this has been a year for GE Vernova, quite a year.
Yeah.
It's been spun out from GE. And it's been quite a year in terms of AI and data center demand. What's been the biggest change for you leading the company in the last year?
Well, I mean, I'm proud of the first year, but most importantly, it's really just the beginning for us because a lot of these trends, whether it be AI, whether it be the electrification of these industries, it's really just starting. So our end markets continue to strengthen. I think there's a more reality-based focus on both the need for gas and nuclear. So the demand cycle for both of those continues to get even stronger today than where we were 12 months ago. And it really then comes back to how do we deliver safely and in a high-quality way to serve this incredible market that we're walking into.
I mean, your backlog is huge, right? It's like $73 billion, right?
Sure.
Can you give me perspective, like how much of that is AI demand driven? How much of that is like wind stuff? How much of that is transformers? Which is the stuff you got to plug into the grid?
You bet. It's still a very small proportion of our backlog is directly attached to AI. I mean, when you really think about even data centers in total, there's only about 60 gigawatts of data centers globally today, and only 15% of that's really explicitly related to AI. Most of it's still cloud and storage. So that's why there's so much growth to come, because we're really just starting. But I'm sure us sitting down a few years from now, it's going to be a larger proportion of our backlog.
How much do you think it would be? Best guess?
Oh, it's going to be a lot more. There's no question about it.
Or
no, I don't think we get to that proportion,
okay.
But it's going to become more AI-centric, and it's becoming even more U.S.-based because the amount of growth that we're going to see in the U.S. the rest of the decade relative to the rest of the world, it's going to be more tomorrow than it's certainly been the last 5 to 10 years.
In the meantime, you cannot get a CEO on the stage at CERAWeek that isn't talking about GE Vernova because everyone's buying your gas turbines at the end of the day. How much of this is firm contracting? How much of that is just like, yeah, we like it, we're going to buy it? Can you give me some insight into that?
Well, we're very firm in contracts, certainly with our gas turbine, our transformer, our switchgear backlog, really through 27 into 28 right now. I would expect by the end of the summer we'll be largely sold out through the end of 28 with those equipment. But we're also looking to kind of find ways to get better every day in a culture of continuous improvement. And if we can increase capacity smartly as we figure out this ramp, we'll do that. But for context, last fall, we announced a really almost 35% increase in supply from 25 levels to 27. So 35% increase is a lot. It doesn't mean we stop there, but we've got to get there first to then reevaluate what the art of the possible really is.
Okay, so to that point, what are the issues with execution then? Like, it's a lofty goal, right? You're investing $600 million to expand plants in the U.S. It's a lot. How fast can that happen, and what are the roadblocks for you?
It's got to happen in the next 2 years. You know, really, this company is going to look very different between now and the summer of 26.
What's the biggest hurdle for you to get that done? Workers? We're
going to add over 1,500 employees. That's a combination of engineering and craft labor. That's all in the U.S. Take gas as an example. We've got to add over 500 heavy-duty pieces of machinery into our global factories to drive this growth in this ramp. So that's a lot in existing factory footprints. We're highly capable of doing it, but it's a lot between now and, let's say, the 4th of July of next year.
Yeah.
So I like our chances, but there's a lot of work to do.
Talk to me about the win part, okay? Because that's sort of like the cousin no one wants to talk about right now, right? Or the uncle. If someone came to you and said, hey, Scott, I'd like to buy your wind business, would you be like, yes, take it off my hands?
No, I don't think it's that simple.
Okay.
I think at the end of the day, we've got a big onshore wind business today. Even in the U.S., we have over 35,000 wind turbines that are spinning, creating electricity today. We see real opportunities to repower that existing install base using the infrastructure that's already been built, but putting longer blades onto the wind turbines that helps the world. We think there's a role for wind, and with that role for wind, we're focused today on just operationally running this business better every day, waiting for the growth and inflection that comes. So we really are a believer in an all-the-above technology suite. But we'll also look at our portfolio every day with a steely eye on what creates value for our shareholders, but there's no binary yes or no answer to that question, but we're focused on running these businesses better and ultimately creating value.
All right, so sticking to the wind. The other part of your business, which I think is so cool, are the transformers, so
yes,
that you can have all the wind farms you want, all the solar that you want, but if you have to plug it into the grid, so I think of it as like a big socket. I'm sure it's much more complicated than that, but talk to me about the growth there, because everyone talks to you about AI and data demand, but like that's where the potential growth is. Walk me through the percentages.
And that's also for context where a lot of our first interactions really came to be more intimate with the hyperscalers. I mean, we did over $500 million of direct electrical equipment with the hyperscalers and orders last year with transformers, with switch gears attached to their data centers. That's a business that we see substantially growing from here. 2 years ago, our backlog coming into 2023 was about $6 billion equipment backlog. It's north of $20 billion today. So
what's the growth rate?
It'll stay growing. Our backlog certainly will grow at that same level for another year here at expanding margins. So this is, I think we can have debates between nuclear, gas, wind. What are the power generation sources that are going to power the world? Regardless, we need to invest in the grid.
Yes, and that then leads us to transformers. Before I let you go, North America is what, like 20-25% of your business right now. Uncertainty is quite high. We saw it with the NFIB, a survey today of small businesses. Is now a good time to invest in the U.S.? And what part of that business do you think it could be in the next 5 years?
I think it's a great time to invest in the U.S., yes. We've gone through multiple decades with very little load growth, and it's really impossible to underwrite a case that we don't need substantially more electrical equipment and supply here over the next decade. And yeah, that's data centers, but it's not just that. We're reindustrializing parts of the U.S. to an extent that is going to require more electrical load, you know, EVs, home heating. There's a lot of other factors, and beyond that, we just need to modernize what we have for resilience and energy security.
How big of a percentage could the U.S. or North America be in your portfolio in 5 years?
It's going to grow as a proportion for sure, but it's not the only market. We're continuing to see real growth in Asia and in Europe, but we're very bullish on the U.S., and we're going to keep investing in the U.S. You cited the $600 million and 1,500 jobs attached to that, but that's not the end. That's just the beginning as we continue to serve this market.
That was Scott Stracek. He is the CEO of GE Vernova, and that was just a touch of the many conversations, which obviously bullish power in a big, big, big way for all the power players. You know, the oil companies are having a tougher time because of the tariffs and what it means for global flows and all of that, particularly if we see a peace deal in Ukraine, what that means for gas flows. But, you know, they're managing.
Is the expectation, if there is a peace deal, that the Russian gas, I mean, the oil and gas coming out of Russia, that we don't know where it's going, but we know it's out there, but...
Expectation is, well, Europe's still buying some gas from Russia. Okay. The real thing is about the gas. The oil will be dictated more by OPEC+. The expectation is that gas will come back online in Europe more, but not to the way it was. Okay. That's the official line. We'll see what actually winds up happening. Have I bored you yet from energy conversations?
No, I love that stuff. I'm all in. I'm all in down there.
Well, he'll be bored by Friday.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.